welcome back. Joining us to put the day's markets action into perspective is Graeme Franck from PSG Wealth Sandton Grayston. Thank you so much for your time, Graeme. Of course, we did see the S&P 500, the Dow, basically the US markets yesterday going into new record highs. And of course, this as investors were plowing into those tech companies ahead of the tech earnings that we are getting this week. And I'm wondering, what are you expecting from there?
Yeah, I mean, it's big. The tech sector, as you say, it's been the big driver of the S&P last year. The Magnificent Seven, in turn, were the big driver of the tech sector. So even though the Nasdaq's down a little bit at the moment, you know, the Nvidias, Microsofts are actually even still up. And as you mentioned in your introduction, Microsoft is going to come out with earnings. We still think the tailwinds are quite strong for the tech sector. They have run hard, the share prices, so earnings are going to have to do well in order to keep those share prices going. The bottom line is they're reporting on very high expectations, and if there are some misses there, the market will be disappointed. But you know, as a friend said, this would be a triumph of experience over the last few quarters, because you know the tech sector has beaten expectations over the last few quarters.
We'll talk about strong tailwinds and counters that are beating expectations. Shoprite, they came out with their 3-month operational update today, saying that group sales rose at 13.9%, saying that they experienced a record Black Friday and festive season trade. We did see investors reacting quite pleased on the back of that announcement that share price was up over 2%. What can you say about Shoprite at the moment? Is it unbeatable?
And as far as the food companies go, yes, absolutely. I think the share price closed probably a little bit more than 3% up. As you said, this was for the 6 months ended December, almost 14% growth in sales in a very weak economy. So relative to Pick n Pay, which is having huge problems at the moment, Spar seems to be coming out of it. They had big management changes last year, and some pretty, I wouldn't say dodgy, but some question marks over corporate governance. So in the food sector, Shoprite definitely is the bellwether. Not cheap. It's trading on 20 times PE. And as you mentioned in your introduction, load shedding and diesel costs are still quite a big factor. I mean, I, for example, know a few people that own some Pick n Pay franchise stores in their personal capacities, and they're spending 400,000 to 500,000 rand per month on diesel, which almost eradicates the profitability of those stores. So some challenges on the macro front, but as far as sales go and market share growth, Shoprite is doing fantastically well.
All right. Well, let's go into another retailer, and that is Pepco, coming out with its trading update for 3 months, saying that group revenue climbed 7.2%. The company is saying that its offering is still well received by customers, to the point where they posted market share gains during that period. Talk to us about this performance from Pepco.
Yeah, also it is one that we like. It comes on the back of Mr. Price. I'm not sure if it was last week or the week before, also beating expectations. And I think, you know, when we come to this to the stock pick a little bit later, the overall South African Inc. shares, so in other words, not the dual listeds, not the US dollar type shares, the SA Inc. shares, be it retailers, be it industrials, be it banks, are so beaten down that any sort of small bit of good news is being well received by the market. And as you say, Pepco, Mr. Price, Shoprite, we now wait for the banks, but that seems to be a bit of a theme at the moment.
All right. Well, a theme that I did notice today was the telcos companies. They were actually all under pressure, with MTN leading the charge. The last time I checked, MTN was down more than 5%. And actually, as I looked through Sens, I couldn't find anything. Do you have some insights there for us?
Yeah, I also was scratching my head a little bit earlier. There wasn't a Sens announcement. The only little bit of news I could find was that they've invested about $220 million US dollars in a little country called Benin. I had to even look that up. It's sort of between Burkina Faso and Niger. And you know, MTN has this. They've done very well in emerging markets over the years, but more recently they are in very, very risky emerging markets that are, you know, obviously closer to the Middle East, dependent on oil, etc. So I'm not sure if that was why the market was scared, but that was the only bit of news I could see out of MTN today.
All right.
By the way, it's not one that we really like.
Yeah.
Again, because of corporate governance issues, they seem to go from banana skin to banana skin, and I guess it's because of the very high risk countries that they are involved in.
All right. Just checking the time to see if I actually should ask you another question before your stock pick. No, I think that is actually it. So let's go to your stock pick for today, Graeme. What will it be?
Well, maybe I'll give you one more little snippet. I mean, in January, the first half of January, the market was quite weak. And I was just looking now from the 15th, 16th of January to where we are now, the market, the South African market, I'm talking, has jumped about 4%. So the sentiment seems to be getting better. In terms of stock pick, I'm going to go for Mr. Price. As I said in my commentary earlier, they're trading on a P of 12 times, fairly healthy dividend yield. But, you could equally pick a bank like Standard Bank, and Mr. Price has jumped 20 Rand since their trading update last week. The banks haven't jumped at all, so still a little bit of very poor expectations on the banks. So SA Inc. at the moment is beaten down, and I think we should see some sort of improvement over the coming months.
All right. Quite a lot of excitement there on SA Inc. So, of course, we'll be looking out for those gains throughout the year. Thank you so much for your time, Graeme. That was Graeme Franck from PSG Wealth Sandton Grayston.